Hey guys, welcome back. You're still tuned into Power Breakfast here on CNBC TV 18, and our entire research team is here to take you through the trade setup this morning and all of the individual stocks that you should track as well. We have Nigel, Rima as well as Sonal joining us now with the trade setup. Guys, a very good morning to all of you. And Sonal, let me come to you first. You know, we were just going through the global setup. Looks very weak once again after, you know, that extremely weak showing we had last week as well.
Oh, yes. So looks like weakness will continue. Though SGX Nifty is not as low as the global markets are suggesting. As far as the US markets are concerned, they posted their biggest weekly loss that we have seen in 2023. Across the board, there was a big fall between 1 to 2% on Dow Jones, S&P and NASDAQ. And that is on the back of a slew of macro data that we got over Friday and the weekend as well. And inflation fears are something which continue to make the Wall Street jittery as well. If we talk about what is expected this week, we have more data which is expected across the global markets and in India as well. So we have GDP data which will be out on Tuesday for our own markets. Then we have unemployment numbers in Japan, China's purchasing managers index as well. The data that we got from the US markets indicated that the inflation fears still linger. The spending is higher, and that is something which could be a reason to worry across global markets as well. For our own markets, we closed in the red for the 6th consecutive trading day, that is on Friday. All sectoral indices, they closed in the red last week, and we had metals, which was the top loser. So weakness continues, 3% lower on Nifty Metal, that is on Friday itself. 46 out of the 50 Nifty stocks, they closed in the red for the week. These are week-to-date gains or losses that I'm talking about. Now, important levels that we'll be watching out for. On Nifty, it's very close to the 200-day moving average at 17,368. The Nifty budget day low is at 17,353. So important levels there. A lot of weakness that we've seen in the mid-cap and the small-cap index as well. So mid-cap index support is at 29,800. Important and crucial level, because if it breaks from there, we could see some more weakness here.
All right, let's see if these levels hold up or not. Sonal, thanks a lot for that. But let me also bring Rima in. She's looking at all of the individual stocks that you should track in today's trading session. Rima, take us through the weekend's worth.
Thanks so much for that. So let me start with Adani Ports, where the cargo volumes have crossed 300 million metric tons in less than 1 year, in 329 days. IRB Infrastructure has won an order worth more than 2,100 crore rupees. It's a letter of award from NHAI. Lemon Tree has signed a license agreement for a 110-room property in Kausali in Himachal Pradesh. NBCC in the month of January has won orders worth 194 crore rupees. SpiceJet, remember, reported numbers on Friday. The stock perked up in trade. We were awaiting the fundraise news, but now we understand that the board will meet again today, where they will consider allotment of equity shares on a preferential basis. But the stock of the day could really be Paytm. Well, this is what we picked up from Bloomberg reports. And there are two sets of news. One, Ant Financial, which is the holding company for Alibaba, they're looking to further sell stake in Paytm. Their holding is currently at about 22% because they did that. They had a block deal where they'd sold about 3% stake in the month of January. So that's part number one. Part two, according to the same reports, Sunil Bharti Mittal, the owner of Bharti Airtel, is looking to acquire stake in Paytm and then eventually merge his holding in Paytm with Airtel Payments Bank. Now, Paytm is denied it. They're saying we don't comment on market speculation and we are fully focused on organic growth. But the stock could be on, in the market's radar on the back of these two, sets of news. One, Alibaba looking to further sell stake, but on the flip side, Sunil Bharti Mittal is looking to buy some stake in Paytm and merge it with Airtel Payments Bank. Back to you.
All right, Rima, thanks a lot for taking us through all of that individual stock-specific action. We're going to watch for all of these stocks in today's trading session. Finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Nigel, like we were just pointing out, the global setup does look weak once again.
Well, that's right, Pavitra. The global setup looks weak. And for me, besides the equity markets, the three big triggers that do come in, the bond yields were higher. Brent crude prices perked up because maybe shortage of supply is coming in from Russia. And also the dollar index has moved to around 105.1. Remember, just not too long ago, we were talking about it breaching that 102-odd mark. What did the FIs do in the F&O market? Well, they unbound some long positions. Close to 3,000 contracts were unbound. And now the short positioning moves to around 82%. So they net short on the index. On the option side, they bought more calls than puts. However, the problem is they're writing calls very, very aggressively. And even in Friday's trading session, well, they were writing the 17,600 call, the 17,700 call, both of them. Big open interest built up out there. And going by that 17,600 call built up, well, the premium's around 50 rupees odd. So that's telling you that at higher levels, that's around that 17,650, you're expecting some bit of supply to come in there. The important marks on the downside is the 200 DMA as well as the budget lows, both on the Nifty as well as the Nifty Bank. So that's going to be extremely important on the downside. My guess is that the first hit of that 200 DMA or the budget lows will be met with some kind of buying, but will it sustain? That's going to be important. For starters, we start off in the red. Back to you.
All right, start in the red. So let's see how we move from there. Nigel, thanks a lot for that. We do have to, on that note, get into a short break. But on the other side, we're going to shift focus from all of the equity-related action to the world of commodities.